The Rebel Capitalist Show. Another thing that we discussed that I think it really blow people's mind is you've done some like investigative work on this. I mean, it's really, really impressive. But some of the central banks around the world are now turning into these quasi hedge funds where they're also trying to privatize gains and socialize losses. And the socialized losses would, I guess, in their minds, come from the Fed. And that leads me to the question of asking, okay, well, who owns these central banks? I mean, is it something like the Fed where who knows? I mean, it's supposed to be privately owned. And if it is it the bankers that own the Fed? Do they get the shares? I don't know if you saw my video the other day, but I dove into that, just this whole ownership thing, and where do the profits go that the Fed makes? Everyone assumes, just because we repeat it over and over and over again, that all the profits go to the Treasury, but that's not exactly true. If you start peeling back the layers of the onion, you see it's not just a 6% dividend. There could be quite a bit more, and there's a lot of gray area, to say the least. But I don't want to go down that rabbit hole before we address what you were talking about with these other central banks kind of being used as hedge funds. Can you dive into that?
So everything is totally financialized, and people bring this up all the time, but a lot of people don't fully explain what it means. What it means is, for decades, the financial sector, so that's banks, investment banks, hedge funds, and other financial entities, have been siphoning off a lot of the profits from the real economy and trading a bunch of paper. A lot of it's in the derivatives market or foreign currency trading or bond trading. And the financialization process, what has really happened, I think, in the last 10 years, and that's where a lot of the stories has really started to accelerate, especially in the last couple of years, is you're seeing what would normally have been conservative investors, long-term conservative investors in the past, like pension funds, university endowments, insurance companies, because of central banks like Fed manipulating interest rates lower and causing financial repression. They can't meet anything close to their investment goals. Look at the stock bull market we've had, and a pension fund the size of CalPERS is still drastically underfunded. Well, what has CalPERS? So what has CalPERS announced recently? They announced that they're going to be leveraging up their assets under management by 20% increase in leverage of the total assets under management, and that they're going to be doing risk parity trade, which is a hedge fund trading strategy where they leverage up on bond trades, on corporate bonds or government bonds.
Right. In which, by the way, Chris Cole has proven that strategy is highly, highly flawed if we go into a deleveraging cycle, which we're most likely going into.
Yes, I totally agree. Now, I didn't get to talk about central banks. So central banks, we're learning details now. The central bankers, there's hubris, they're getting too cocky. Last year, there was a speech out by a Australian central banker, Reserve Bank of Australia, where he was bragging to, I guess, a bunch of other central bankers or regular large money center bankers about the leveraged currency trades and leveraged bond trades that the Reserve Bank of Australia was doing, and how it was easy to make profits off a basis trade, which is a leveraged bond trade, and in currency trading too. And then recently,
But where would those profits go? Like, let's say the Australian central bank makes $100 billion in these hedge fund type of bets. Where does the profit go? Does it go to their, I mean, do they have shareholders like the Fed supposedly, or does it go to their treasury, or does it go into a black box where we never see it again, and all the people working at the central bank are driving Ferraris? I mean, how does that work?
Well, I think this is why we need more transparency here. We need audits of these different central banks. My educated guess is they're doing these other trades to try to offset losses on derivatives, because Martin North has talked about the derivatives position of a lot of the largest Australian banks, their derivative position in real estate, mortgage-backed security, and other derivatives, and how that has exploded. There's many trillions there. So I would not be surprised if they're making other profitable trades in currencies and bonds to try to put out some derivatives trades that are blowing up, because the Fed doesn't want to go in and have to back with many, many trillions all these bad bets all the time. Plus, there's a pound of flesh to a lot of these currency swap bailouts that happen. So the press releases from the Fed say that they're giving out currency swap lines at like 50 basis points or 25 basis points, but that's not the full story. Nomi Prinz, who is a former managing director at Goldman Sachs and Bear Stearns, for her last book, she wrote the book called Rigged: How the Central Bankers Rigged the World. And as part of the research, she actually flew down to Brazil and Mexico, and she interviewed current and former central bankers before the book came out for research. And that's not the story. The central bankers were saying how like Ben Bernanke was threatening them and demanding a pound of flesh in exchange for the currency swap lines to help with the bailouts, and that they had to do what he said.
What's an example of a pound of flesh? I mean, I get the term, but is there a concrete example of what Bernanke was telling them needed to happen?
Yeah, my educated guess on that from past U.S. trade deals would be some type of either investment into the U.S. by their largest foreign companies, or resource concessions, or some type of beneficial trade deal. Remember, one of the main reasons, a lot of people forget this, with the Plaza Accord and why Ronald Reagan agreed with his trade representatives to devalue the dollar was because Japan and Germany wanted the dollar devalued. They had too much dollar-denominated debt. But in exchange for that, Japan, which their main company at that time was Toyota, they had to move factories into the U.S. So the trade concession was factories and jobs come back to the U.S. from Toyota.
So if I'm hearing you correctly, is it safe to assume that your position is whenever the Fed does something for a central bank, we'll just use swap lines as an example, there's always something behind the scenes that the Fed is saying, okay, we'll do this for you, but you need to do this for us type thing?
Yes. So they issue a press release saying that we're just giving out currency swap lines. It's a short-term loan. It's only like 25 basis points or 50 basis points. The money will be paid back shortly. But the Fed can also, at its sole discretion, this is very subjective to the Fed, because they can just forgive the loans to whoever or whenever they want. And I think that's what happened when the Fed gave out currency swap lines in 2008, 2009. They started forgiving the loans fairly shortly after that. That's what Ron Paul said over about a 2-year period.
Wow. Makes you ask the question if they're doing it now. I mean, the same thing. You know, I actually did a live stream on my forum with Lynn last night, Lynn Alden, and we were talking about the swap lines, and they haven't been used a lot, but she used a chart going back to 2008 where you saw that heavy spike with the swap line usage, and then it kind of dropped down substantially. But you kind of scratch your head and say, well, did it go down substantially because it was paid off, or to your point, because the Fed just canceled the debt because of some behind the scenes favor that we don't know about? I mean, I guess kind of where my mind goes is back to the dollar being the world reserve currency. And the only way the Fed can really do this and get away with using all this leverage, for lack of a better word, mob type of leverage, is because the dollar is the world reserve currency. There's so much dollar denominated debt. But if that wasn't the case, I mean, I'm just trying to really get outside the box and think, how would the United States, how would the economy look? How would our monetary position look if another country was the center of the economic universe? And instead of everyone having to play by our rules, we had to play by their rules. I mean, how much different does that world look, or how much different does that domestic economy in the United States look if that were the case? What do you think?
I think there's a lot of people, a lot of powerful entities in other countries and foreign companies that benefit from the status quo. Honestly, George, when I look at the current system, there's over 250 trillion in total debt. And this was before the crisis started, the most recent crisis started in February and March. So 250 trillion in total debt mathematically can't be paid back. So yes, there's a lot of assets in the economy. When things are normal before the global pandemic, there was cash flows, but mathematically that 250 and now more than that trillion cannot be paid back. And yet more debt is being issued, more currency is being issued. And the currency is debt-based fiat currency, digital debt-based fiat currency. So I view this system, George,
Which
as
creates
a
more demand for
Ponzi
the currency.
scheme.
Just to clarify, sorry to cut you off, Jason, but just for the viewers, that the more currency, the whole point of what Jason just said is that there's, as you issue more debt in that currency, it creates more demand for that currency as well.
Also, they want to, when they issue more debt, they try to change the interest rates on the debt on the old debt. So they're trying to, it's a Ponzi scheme. Basically a Ponzi scheme. It's going to sound crazy, but if you're trying to solve a debt problem with more debt and you're issuing debt-based currency and the amount keeps growing and you know it can never be paid back, that to me sounds like a Ponzi scheme.
100%.